What's going on, everybody? It's Stas here. So recently I made a video going over one of the biggest mistakes I believe investors are making right now, and that is that they're too over allocated to SPACs, the high growth names, the more speculative names out there. And I'll link that video down below if you guys do want to check it out after this video. And I figured since that video got a good response and I got a request to make a video about SPACs I like, well, let me make a video about SPACs I like, right? And this is what you're watching right now. So I hope you all enjoy it. If you do, hit the like button, subscribe, make sure to go down below, check out all the free resources, the Discord chat, the Facebook group. If you guys want $30 from M1 Finance, $10 from Coinbase, and if you all want to check out my Patreon or the YouTube channel membership, all of those are linked right down below. So let's talk. And first and foremost, today in the markets, we're seeing a bit of choppiness. SPY, also known as SPY, is hovering between 416.50 as support and about 418 as resistance, and we'll talk more about this in the video later on today, so make sure to stay tuned for that. And now let's just talk about some of these SPACs, guys. And first and foremost, you all know SPACs have been the way to go these past couple of years. I mean, the past year or 2, 3 years, a lot of these companies out there, well, not a lot of them, but a decent amount of companies, let's put it that way, they've gone public via a SPAC, right? Also known as a blank check company. And the way this works is there's a SPAC, right? And this SPAC needs to find a company to merge with. Oops, I just knocked the mic there. They need to find a company to merge with to then go public, right? In layman's terms, that is what it is. You have a SPAC here. It's a fund. There's a lot of money. There's managers, and they're looking to take a company public, right, via the SPAC merger and, the acquisition. In layman's terms, that is how it works. And in general, listen to this, guys. This is very important, and you'll see the screenshot right here. In general, the IPO price of a unit, which, quote-unquote, consists of one Class A share and a fraction of a warrant, is $10 per share. And after underwriter fees, the net asset value, also known as NAV, NAV, whatever you want to call it, is something around $9.50 per share, with the principal sitting in an interest-bearing account. And listen to this. Pay attention very closely here. For our purposes, since each share is redeemable for $10 cash should investors not approve of the acquisition target, we will go ahead and assume that the cash floor is $10 per share. That is very important. The cash floor is $10 per share. That tells us that in order to reduce risk as much as possible, we need to pay as close to $10 per share as possible. So what that means is, if you're looking at a SPAC, right, the closer it is to $10 per share, the better the deal is, right? The better the risk reward is. And looking back, we saw a lot of these SPACs go to $30, $40, some even higher than that. And you could argue that that is a very ridiculously overpriced value for a lot of these SPACs. Sure, some of them do deserve that inflated price, but a lot of them, and now you clearly see that as a lot of them crash down, a lot of them, they belong closer to $10 per share than they do to, let's say, $30, $40, $50 per share. And again, we've seen a lot of these SPACs completely tank. So let's talk about some of these. Number one, we have SRAC, S-R-A-C. And this, I'm not sure if you guys recall, but I made a video on this one months ago. I'm talking months and months and months ago. And this was back in, I think it was like December, or not even, before that actually, October, November, we made this video when this was sitting at $10 per share. Then it ultimately tripled up, right, guys? It went from 10 to 30, and now it's all the way back down. Well, it did go back to 10. Now it's sitting at 13. And this is exactly what I'm talking about, right? There was a lot of hype around this one, and then it died off. And this is momentous. This company, the SPAC, SRAC, is going to merge with Momentous, which is the first company to offer the infrastructure infrastructure services necessary to enable enterprise and human existence to flourish in space. We are striving, and we as in Momentous are striving to meet the needs of our customers by offering the most affordable last mile satellite and cargo delivery, payload hosting, and in-orbit servicing options. And I'll link my video I made months ago down below if you guys do want to see a more in-depth video on SRAC, on Momentous. That's linked down below. And one thing worth mentioning with these SPACs, guys, is if the merger takes longer than expected, a lot of the time, some of the time at least, the SPAC might sell off. The hype might die down. And in general, yeah, that's kind of what we're seeing with Momentous. And on top of that, we're seeing the overall selling of SPACs ever since the beginning towards the middle of February. That's a trend you notice, right? Look at all the charts of these SPACs. They've gone down for the most part since February, and now we're sitting towards the end of April, and it's been about 2.5 months of this selling, but now we're seeing this reversal happening. We're actually seeing a bottoming out at that $10 value, and remember, the closer and closer we get to $10, that's a better and better deal, and now we're sitting at $13. We're up about 30% from that $10.50 bottom point that occurred about a week ago. So at this point in time, SRAC, and mind you guys, I actually never took a position in this. I never took a position in this one, and now might be my chance. I think there's still an opportunity in this now that we dumped down aggressively, and we're actually about to test the 180 moving average as we speak. You know, the next couple of days here is going to be key. They're going to be key for SRAC, because if we end up breaking, let's say, 1380 to about 1360, right around the 180 moving average here, this could end up seeing a nice pump, as it seems like we are getting a rotation back into these names. So SPAC number one I really like is SRAC, and this is a space play. I mean, if you're into space, if you believe in that stuff moving forward, you know, I have an investment in Virgin Galactic. That's another SPAC that, well, it already SPAC'd and merged a while ago, and that one also has collapsed. If we pull that one up, you know, SPC went from $60, now it's sitting at $23. It's down 60+%. You know, this is another one that you could play if you believe in space. And mind you guys, these are definitely more speculative companies. You know, Virgin Galactic, it's not making money. I believe their last quarter they made, or the quarter before that, they made $130,000, you know, as a publicly traded company, and that was from engineering services. So they're not making any money. It's a completely speculative play, but if you believe in space, like I said, it's worth looking at. Virgin Galactic, same with Momentous. And another one that I like, which is by the man himself, Chamath Palihapitiya. He's known as, and he's been, you know, coined as the king of SPACs, right? This is SOFI. IPOE is the ticker, and Social Finance, also known as SOFI, is an American online personal finance company, a mobile-first service based in San Francisco. SOFI provides a suite of financial products that include student loan refinancing, mortgages, personal loans, credit card, investing, and banking through both their mobile and desktop interfaces. So this is more of a personal finance, you know, fintech type of company. And you can see the hype behind this one. It started at $10, ran all the way to $28, so pretty much 300%. It saw a 300% pop, 3x return, right? And now it's down a good chunk from $28. It bottomed at about $14 by the looks of this chart, right, guys? And you can see the descending triangle that's forming here. So this is not quite yet bullish, right? In fact, we very well could get rejected right around 17 and dump back off to the 14 level. That's still in the cards, but the fact that we've recovered above 14, we're pushing towards the moving averages here and the resistance overall, that is a good sign. And I believe if we take out, let's say, $18, we could end up seeing $20 plus again on IPOE. So I'm going to set an alert here at about $18 per share. We'll monitor this one closely. And overall, this is one that I think could do very well. You know, Chamath Palihapitiya, he's a very smart guy. the management team that he has on these SPACs, I mean, this is a very good management team, and the companies that they're looking to merge with, SOFI, we have Open Door, he's done as well, which is one that I do own. I bought this one when it was IPOB. I'm not sure if you guys remember that, but that was months on months ago. I covered that here on my channel, and I believe I bought those shares at like $16, $18. I don't remember, guys. And one thing that you have to realize when you're long-term investing, sure, swing trading, day trading is different, but when you're long-term investing, and this is the way I do it, I buy stocks and I forget about it. I'm not checking my long-term accounts every day. I couldn't tell you what my average price on it is, honestly, but I know it's under 20, that's for sure. It's about $16 to $18, and that's the way I do it. And that's a way that I reduce stress as well, because I'm already looking at my swing trades. I'm doing my day trading as well whenever I day trade. And yeah, let's be honest, trading is a bit stressful at times, so I don't want to add more stress by looking at my long-term investments every day and being, nitpicking those every day. But Open Door is one that I do own. I like it. Chamath is running it. This one already, merged. You guys can see it sold off from $40 to about 15. So this one saw a spanking as well, down 60%. And now we're recovering. We're actually peaking out of the moving averages as we speak. So I like Open Door here. This one has a lot of potential. And another thing worth mentioning is not all SPACs have a target of what they want to take public. And by that I mean they don't always have a company quite yet. They're not always in talks with a particular company. So you can actually look at a SPAC and invest in it in hopes that they're going to merge with a strong company. And one of those I'm looking at here is IPOF. This is another Chamath Palihapitiya SPAC. This one's sitting at $10.60. And I don't own this, but the way you can invest in this, let's say, for example, is you buy some here and you hope and you start praying that they end up, merging with or getting with a company that is very, very strong. Let's put it that way, right? So let's say, for example, we have, let's just throw a company out there, Lucid Motors, right, which they actually are merging with CCIV. That's another SPAC. But let's say, for example, Lucid Motors is going to merge with IPOF, right? And then we saw IPOF double up. That is a way that you can make money in trading SPACs that haven't yet found their acquisition target, right? So that is a way more speculative, I'm not going to lie, because no one knows, A, what company they're going to merge with, and B, what the time frame is that they're going to merge with said company. So that is way more speculative, but that is a way that you could invest in SPACs, is by looking at companies like IPOF that, again, they have not yet found their acquisition. And we have CCIV, like I mentioned, I hinted towards that one. They're taking Lucid Motors public. This one got very hot, and this is a good example of it, right? It started at $10, it went to $65, and now it's back down. Well, it got back down to 17. Now it's sitting at 23. It's still down well over 50%. It's down 66%. So this is what I'm talking about, guys. This could be a good value at $23 a share, but it'd be even better if it got to, let's say, 15, under 15. And now that I'm looking at it, I probably should have bought some CCIV as a flyer pick or, a more speculative play. But then again, who knows? We could end up getting that deal in the next couple of weeks if we do get another downturn in these SPACs. So overall, guys, those are a bunch that I like, and I personally own some SPACs. I own GNOG. This used to be, what was the one on this? Was it LCA, I think? They ended up merging with, I think it was LCA. Another one I personally like and own is Tattooed Chef. They were, what the heck were they? I don't even remember what their SPAC name was, but now it's Tattooed Chef. That's all that matters at this point. And this is one that I've been buying on the way down. Another one I really like and own is, of course, DraftKings, and if I had to pick only one SPAC to invest in, and this is a post-merger SPAC, I'm going to pick DraftKings. I think this is the most solid one right now. They have a lot of partnerships, a lot of growth, and a lot of future growth with all of these states legalizing, online gambling, sports betting, all that good stuff. So DraftKings, I absolutely love. And Skills is another one that I own, which I've been making a lot of money on this one, guys. We bought this one at $16, $14. I actually locked in some profits yesterday at $20. I made over 20% on that move, and I actually post all my buy and sell alerts, call outs, and I do a lot of exclusive content on Patreon. So if you all are interested in that, make sure to check the link down below. And one more is Arrival. This is a perfect example. It went from 10 to 40, went all the way back down to about $12, which would have been a nice pickup. I didn't add any there. I probably should have. And now it's sitting at $19. So these are a bunch of SPACs that I like, many of which are oversold. I'd love to know your thoughts down below in the comment section as always. And if you all enjoyed the video and I earned your like, hit the like button. Maybe subscribe to the channel as well if you want to see further content. And don't forget to check out all the free resources down below, the Discord chat, the Facebook group. You can get $30 from M1 Finance, $10 from Coinbase. And again, check out my Patreon, or you can join the channel membership. It's the same thing pretty much, but the channel membership's a little bit cheaper because you don't get direct access to me via DM, which you do get on Patreon. So all of those are linked down below. I'll catch you all in the next video. Thanks for watching. As always, guys, stay safe out there. Keep crushing the markets. Peace out.